But let's talk about another good set of numbers. PTC India, the stock is up about 3% right now on the back of a good set of numbers. The revenues grew about 52% and the net profits were up almost 24% or so. Deepak Amitabh, the chairman and managing director of the company, joins us now to talk about that. Mr. Amitabh, thanks so much for joining us. You've seen a good jump in your tolling volumes and your overall power traded volumes as well, on the back of which your revenues have seen a healthy 50% jump. Could you just give us an indication of what the quarterly run rate could look like going ahead, and how much more of an improvement are you expecting to see?
See, as we have always discussed with, that PTC's volume model depends upon short-term market as well as long-term market. And last couple of years we have seen that the long-term projects have been coming into operation, and that is the reason there is improvement in volumes and improvement in profitability. And we are sure to maintain the growth pattern in the next financial year also. So we have moved from, earlier we used to be in 10s, then we will move to 20s, and I'm sure from this year onwards we should be moving into 30s billion units.
Okay.
So, and the quarter, during the quarter we have seen the results have been extremely healthy, and tolling, what you have said, has contributed. This is the first financial year in which the tolling came into operation, and about 950, close to 1 billion unit contribution out of that 28.5 billion units. About 1 billion has come from the tolling.
Okay. Mr. Amitabh, thanks very much for joining in this morning. Just wanted a couple of parameters out of the way then. How exactly have you done in terms of your total realizations this quarter, and what exactly would be the trajectory going forward? What is the average realization that we could expect possibly in the next 1 to 2 quarters, or whatever the foreseeable amount is for you?
Yeah. As we have seen, as on 31st March 2013, we have a cash balance of more than 350 crore, which was less than 50 crore 1 year back. So more than 308 crores accrual in the cash balance we have seen during the year. Also, if we take out some of the old outstandings which are getting collected now, our average collection period, means that the gap between the debtor days and sundry days, has come to less than 1%. So our working capital need has almost become nil now, and we propose to carry on the same trend during the next financial year, during the current financial year also. And we also believe that during this calendar year, all the old outstanding which are there, Tamil Nadu should happen faster, and followed by Uttar Pradesh. We should be at a same position which we have always maintained right from 2002 to 2010. That is always cash surplus, and with almost zero working capital and zero debt company.
Okay. Just one word on your tolling business again, Mr. Amitabh. This quarter I understand that you've maintained your margins at 80 paise per unit, and there are some analysts on the street who expect it to improve going ahead, which would eventually contribute to your overall margin picture as well. From that business itself, what kind of incremental contribution are you expecting?
See, as on today, the tolling, this thing we are selling in a short-term market, and short-term market prices are very volatile. Currently, because of non-connectivity of southern region to the rest of the India, the prices are high, on the higher side in the southern region. But therefore, we should not be over-optimistic in these things. But from tolling, we believe that we'll maintain a healthy set of profit in the coming couple of years.
Mr. Amitabh, just coming to the SEB problem now, in terms of the outstanding dues from Tamil Nadu as well as UP, where exactly does it stand, and how have things changed after most of the SEBs have agreed to restructuring? What are the timelines of dues or repayments that we could expect for PTC India? Because I do understand in the previous quarter you had around 350 crores outstanding from the Tamil Nadu SEB, which was expected to restart first half FY14. Has anything changed now that they've agreed in terms of restructuring?
Yeah. What I'll say, that during last financial year, we received more than 375 crore cash from TNEB and rupees 513 crores from UP also during the last last financial year, which has added to our cash balance, increasing to 350 crore from 45 crore earlier. Tamil Nadu has also agreed, and that's the reason it has been paying. And we believe that in the next 2 to 3 months of time, Tamil Nadu receivable should come down to 0.
Okay.
And UP also, they are on a fast track now. And we believe that if the restructuring process, if in couple of months the things when it gets completed, I am sure bankers etc. will start funding them back, and we will be able to receive. And that's the reason I see during this calendar year, we believe that the total outstanding should become 0.
Okay, fair enough. You had signed a 1-year contract with the Andhra Pradesh SCB as well for the sale of the 200 megawatts, which was due for a renewal. I understand that currently the short-term rates are higher in southern India. Do you think that the contract could be renegotiated at a price higher than the 5.75 rupees per unit that was talked about earlier?
See, we have to always believe, I do not know what is the exact sale price for that. The contract has been renewed. But one thing we have to always take into consideration, that we have seen the experience of power sector has been that if you go for excessive charging of prices, you get caught into the receivables building up over a period of time. So we always believe that always have an optimal mix of profitability and collectability.
So the price, no, I'm just trying to understand whether the prices will be firmer than what they are right now. What is your sense of how the rates could progress from here?
I think we are, not only us, everyone in the southern region is getting a reasonable amount of profit, and which we see continuing for another 1 year.
Okay. Mr. Amitabh, just before we wrap up this conversation, one quick word on the working capital then. If in case you do assume that UP and TNSEB will possibly clear their dues in the next couple of months, where do you expect your working capital situation to improve to? Hence, what sort of cash flows can we see for the company going forward?
See, that's what I said, that working capital requirement will be almost going back to the nil position. Means we will be, whenever, see, as a trading entity, you supply power, so you have to make payment to the people who supply, and you have to collect the money. The ideal thing will be that to get the money faster than making the payment. So then it becomes a negative working cycle, which may not be possible in the current scenario. So you can keep it at if your collection is perfect, and your payment obviously has to be perfect, then it almost boils down to zero working capital requirement.
All right, Mr. Amitabh, thanks so much for joining us. Sure, we'll have to leave it at that. We'll run out of time. That's the word on PTC.